Oil prices bucking the broader risk-on trend, falling today after an exclusive Reuters report that the United States could be about to release some of its strategic oil reserves onto the market. I'm Jamie McGeever and this is today's Market Pulse. With me here in the studio is Chris Johnson, energy editor at Reuters. Chris, oil down today across the board. Is that solely down to this Reuters story?
It's not solely due to that story, but I think that's a very important part of it. The US controls well over 700 million barrels of strategic reserves, and if it released any of that onto the market, it would have a dramatic impact. There's no doubt about that. But it's worth also saying that the market has been very strong over the last 8 weeks. It's up about 30%. So I think there's a fair amount of profit taking in there as well. Perhaps the market was looking for an excuse to sell. For an excuse to sell, yes.
Now, as we've got a couple of charts that show the fall in Brent has been steeper than the decline in WTI, yet if the US is to put these oil supplies onto the market, one would expect the fall in US crude to be larger, no?
There are two issues there. One is a US release from strategic stockpiles would not be a sole release. If the US acted, it would act with its partners, and that means other oil would come out of other reserves elsewhere in the world. So that's affecting the international price. Brent is very much the international marker, whereas WTI and the US crudes really reflect a different kind of market. So you would expect Brent to be more volatile, and that relationship between Brent and the US prices is movable. It does change. So you can't necessarily expect that that relationship will remain as it is. I would expect that perhaps the differential between the two would reassert itself.
Now, in the past, we've got a chart that shows, we've got a graphic that shows, going back over 30 years or so, that shows that when the US in the past has dumped these oil supplies onto the market, prices have fallen, but not for long. Could we expect anything different this time around?
No, I think we'd expect a similar sort of pattern. I mean, in the past, the biggest releases that have come from the SPR have been of the order of perhaps 30 million barrels. Now, if you dump 30 million barrels into the oil spot market in a few days, that has a dramatic impact on prices reasonably. However, the fundamentals are going to reassert themselves, and I think we'd expect that. You have to remember that the market is very worried about all sorts of things at the moment. Hedge funds, for example, we can see have been increasing their net long positions on futures and options. They're worried that there might be a war in the Middle East. Perhaps Israel might make good on its threats to perhaps take out some of the Iranian nuclear facilities. And also there's a worry that among people who might be short, that perhaps the United States might release a new wave of quantitative easing, pouring money into asset markets. That would be likely to push up commodity prices and oil prices.
Of course, on the other side of that, you have the bearish fundamentals for oil in that the global economy is particularly weak, and demand, by extension, should be soft.
Yes, yes, indeed. And in fact, if you look at the price of oil in dollars, we're nowhere near the great big peaks we saw in 2008, but we're pushing up to the highs for this year. But in euros, in fact, oil is not too far off the peak it saw earlier this year, and that's clearly having a dramatic impact on what's going on in Europe. If you increase oil prices very dramatically, it does tend to lead to slowdowns, and indeed all the great recessions since the Second World War have been preceded by a spike in energy prices, without exception.
So why, just to finish up, as you mentioned, oil prices in euros this week were close within 1 or 2 euros of their all-time high. Why has there been a larger rise in euro terms vis-a-vis, say, sterling or US dollars?
Well, that's because of the relationship between the currencies. Obviously, it's been a currency movement. But I think it's also worth saying that consumption patterns have changed over the last 2 decades, and the thrust of the burden of prices is being felt very, very much more strongly in Europe than it is elsewhere.
OK, Chris, thank you very much. That was Reuters energy editor Chris Johnson. And that's all for now, but do watch us at this time every weekday for Market Pulse, a snapshot of what's moving on financial markets and why. I'm Jamie McGeever. This is Reuters.